All right, everyone. Good morning. Thank you very much for joining me in this video. I'm going to be holding the microphone because I made one big mistake, and I'm going to say it so that you don't make this dumb mistake. Believe it or not, Mike made a big mistake. I ordered this microphone from Holland, from the Netherlands. Took a while to get here. When I did order this microphone, in the image on the website, it was showing the microphone with the base that I guess, I don't know how you call it, that holds the microphone so I don't have to hold it. And dumb on my part, I thought just by looking at the image that, oh yeah, that's what I'm going to get for that price. I should have read the description that, that comes separate. And so now I ordered the base, and it's going to take another week or so for it to get here. But anyways, guys, I do have a really good video for you guys, and it's brand new exchange traded funds that have come out. And these are ETFs that you should know, because some of these, I'm not saying all, some of these are going to make money for people and build wealth through the years. I think we all know, and it's not a secret, right, that good ETFs are pretty much one of the best ways that you can build wealth. It's a good way of depositing money into that ETF, putting money into it. Sort of the same thing as you would put in a drawer or in your bank account, but at the same time, though, ETFs will give you a much higher return over the years if they're good ETFs. So let me show you some good ones. Let's go to the first one, and that is the Foundations Dynamic Value ETF, guys. Ticker symbol FDVL. Now notice that all 8 of these ETFs that I will show you, they all came out within the past 10 days this month in October, so they're pretty much brand new. The Foundations Dynamic Value ETF, ticker symbol FDVL, is trading right now at $10.09, which was pretty much what it closed yesterday. And don't forget to subscribe, guys. Share the video and hit the like button, because that really does help and it supports this channel. All right, so basically, guys, this Foundations Dynamic Value ETF is an exchange traded fund that mostly invests in total market equity. The fund is an actively managed fund of funds that selects value-focused U.S. equity securities based on the level of intraday volatility of the market. It has a bias towards large caps, but may still hold some mid caps. And it was launched on October 2nd. Actually, October 3rd is when it went public. Basically, this is ETFs within one ETF, and I think it's going to do well. I think this ticker symbol FDVO should do well over the years. So they have the Vanguard Value ETF in it. They have the Vanguard Dividend. They have the Vanguard High Dividend Yield, the US Dollar Future. What else? Vanguard Mega Cap, Vanguard Mid Cap, Vanguard Small Cap, US dollars. And so, yeah, that's that. I like it. Number 2, guys. Number 2 is Foundations Dynamic Core ETF. FDCE is the ticker symbol, trading at $10.05. The fund is an actively managed fund of funds that provides exposure to U.S. equity markets, and the fund has few limitations in terms of market cap or style of equity. And if we go and look, it is truly a fund of funds. You have Vanguard Total Stock ETF, the iShares Core S&P Small Cap, the iShares S&P 500, the US Dollar Futures, Vanguard Large Cap, iShares Core S&P Mid Cap, and so on. Number 3, guys, let's go to number 3. All right, the third one that came out within the past 10 days, and it came out on October 3rd. Now, by the way, like I said, I'm just mentioning ETFs that came out within the past 10 days. I'm not saying that you should buy any of these, although I'll tell you at the end one that I think is a buy, in my opinion. In fact, it's not one that came out within the past 10 days. It came out last year, but I did include it in this video because it has proven itself to be a really, really good ETF. So this one, guys, is called the Eck Ethereum Strategy ETF, ticker symbol EFUT. You would think it has something to do with Ethereum. Kind of doesn't have anything to do with Ethereum, so I'm not sure why they call it Eck Ethereum Strategy ETF. It's trading at 1564. And there is a video on this on CNBC television by the CEO of Eck, who talks about this, and it's called "I Look at Ethereum as an Aggressive Growth Investment." Fine, okay, I'm glad you do, but the fund actively manages a portfolio comprised of USD, cash-settled Ether futures contracts. So kind of, it doesn't really have a direct, it's not directly linked to Ethereum. All right, so it says here, importantly, it does not directly invest in Ethereum or other digital assets, right? So it might get people a little confused, but we'll have a true Bitcoin and a true Ethereum ETF soon. BlackRock is trying to come up with one, and so is Fidelity. Here's the website for the Eck Ethereum Strategy ETF. Let's move on to number 4. And number 4 is Brandy's International ETF. BINV is the ticker symbol. It's trading at $25.35. And the Brandy's International ETF, this is a fund that is actively managed, investing in equity securities of companies who perform their business activities outside the US, right? So you're looking at an exposure internationally, outside of the US. The fund seeks securities that are perceived to be undervalued, and this fund was launched on October 3rd. In my personal opinion, maybe you don't want to look at this one. Maybe you want to look at another one. But you should have an ETF that has an exposure to international markets, because if you want to have a diversified portfolio, that's a must. What does diversified portfolio means? It means having an investment in different sectors in the US, internationally, not just stocks, also in treasuries, bonds, etc. So when one sector does bad, because every year one sector does bad, the other does not, you'll be fine. That's what diversification means. If you're investing on just one particular thing and it does bad, you're done, right? So it's not right to do that. Be diversified. Once you trade long enough, you'll understand what diversification means and how important it is. The top 10 holdings for this ETF, we can see here, they have Takeda Pharmaceuticals, which is a great company, Alibaba, Rolls-Royce. Guys, Rolls-Royce, I've done a video over 2 years ago on Rolls-Royce when it was trading at about $1.20 something, and I did say that this company is going to be big. Not going to be big. It was a big company, and it sort of is. They just had, they screwed up a while ago. But they're involved in small modular nuclear reactors, especially in the UK. So maybe you'll want to look at that, as that's probably going to be the future of nuclear reactors in the world. So they also have GSK, great company, Sanofi. I'll never forget Sanofi. This was a stock that I called out on my Discord at $24, $28, and it's over, I don't know, 50 now. So yeah, let's go to the next one, number 5, guys. Number 5, guys, is the Core Values Alpha Greater China Growth ETF. Ticker symbol CGRO, trading at $19.60. So the fund is an actively managed exchange-traded fund that seeks to achieve its investment objective by investing primarily in equity securities of companies operating in high-growth sectors in Greater China, which includes mainland China, Taiwan, and so on. So the best of the best in China. If you want that type of exposure, you might want to look at this ETF. Some of the holdings are Tencent. Who else? PDD Holdings, you know them. Taiwan Semiconductors, BYD, right? So I think those Alibaba, great companies. Number 6, guys, JP Morgan US Tech Leaders ETF, JTEK. JP Morgan ETFs usually always start at $50, most of them. So it's at $49.77 right now. So this is an actively managed fund that identifies US equities that are perceived as leaders in the technology and technology-enabled industries, such as engineering, construction, entertainment, biotechnology, pharmaceuticals, REITs, energy alternative sources everywhere. So it's a very well-diversified fund, I'd say. Their holdings: Meta, Tesla, Alphabet, Synopsys, NVIDIA, Oracle, Amazon, Adobe, Salesforce, Advanced Micro Devices, AMD. And when we go to Meta, guys, keep in mind Meta. Yesterday, I posted a message and a screenshot from the dark pool that we have in my Discord. And I also posted that on my Twitter. And there was a $154 million sale, $154 million worth of shares of Meta that were sold yesterday in the dark pool. And Meta has earnings within 4 days from now. So for me, that means that someone might know something and that the earnings won't, that they won't be good. We'll see. But that's what I saw in the dark pool. Here's another one that you might know, YieldMax. YieldMax came out with Tesla that a lot of people know about. Pretty much all the YieldMax ETFs are ETFs that pay a monthly dividend with really high yields. So they're pretty cool. And I think they are a must as part of a diversified portfolio, but not fully into these and nothing else, right? In my opinion. YieldMax SQ Option Income Strategy ETF, SQY, is trading at $19.41. And this fund seeks to provide current income and capped gains on the block stock, ticker symbol SQ. It does call and put options on SQ and pays you a really nice monthly dividend. But you should get into these YieldMax ETFs at the best bottoms that you can, so don't get in right away because they typically this one will start falling before it levels. So yeah, wait for that a little bit to fall. Harbor Healthcare ETF is the one that I think all of you should check out. This is an exchange traded fund, guys, that's been around since 2022 and has proven itself. This is a proven ETF that is doing very well so far. Had you invested in this from the beginning, you'd be up 11.61%, which is not bad within 1 year return. That's a very awesome return. I mean, think about it. The brokers are telling you, hey, put your money here and we'll give you 5% annually. Well, you know what? Here you get 11.6% return within 1 year. Some of the top 10 holdings is Eli, United Health, Ascens Pharma, who else? Dexcom, Humana, Legend Biotech, Rocket Pharmaceuticals, Intuitive Surgical. So GE Healthcare. The healthcare sector is the defensive sector. Why do they call it a defensive sector? Why? Because when things get bad, the healthcare sector tends to do better, or if it's going to go down also, it's going to go down less. It's not a cyclical sector. It's not a technology sector where the technologies are affected, by many things, and at some point maybe the technology sector doesn't do well. Look at the EV sector, for example. When we have the economies of the world going bad, less EV sales and so on. But the healthcare is going to be around. Healthcare is a defensive sector, and and you can see that the past 1 year, this thing's up 11.6%, where many other sectors for the past 1 year are down, right? Many, right? So I think the Harbor Healthcare ETF, still trading at a cheap price, is a very good ETF and could be within the next 5 years trading at $45. And I think that's an awesome return. So thank you very much for watching this video, guys, and I wish you guys a good Friday and a good weekend ahead. Take care.